So you've made it to retirement. You might be thinking the tax headaches are pretty much over, right? Well, not exactly. But here's the really good news. In retirement, you're not just a passenger on the tax train anymore, you're the conductor. That's right, you finally get to call the shots.
So here's what we're going to cover today. First, we'll talk about the big tax challenge in retirement. Then, how you can actually control your taxable income. We'll get into some key strategies to save on taxes, figure out how to make the right choice for you, and finally, put it all together into your own tax-efficient plan. All right, let's jump right in. Section 1, the Retirement Tax Challenge. You know, when you were working, your financial life was kind of like a fixed menu, right? Your paycheck came in, taxes came out. Simple. But retirement? Whoa, it's more like a giant financial buffet. And if you're not careful about what you put on your plate, you could end up with a much bigger bill than you ever expected. For decades, your tax bracket was pretty much on autopilot, wasn't it? It was set by your salary. But now, everything's changed. You are in the driver's seat. You get to decide how much income to generate each year from your savings. And that means you get to pick your own tax destination. It's a huge shift in thinking. Just take a look at this comparison. On the left, that was your life while working. Your income was a fixed number, your tax bracket pretty much locked in. But now look at the right. That's your new reality. You're the one in charge of the withdrawals, and because of that, you're the one in charge of your tax bracket. Seriously, it's a whole new ballgame.
But, you know, this new control, it's kind of like a double-edged sword. The pro, you can be really strategic and manage your taxable income every single year to save money. The con, well, bad timing or a wrong move can accidentally push you into a higher tax bracket or, even worse, trigger some nasty penalties. We're talking about things that could cost you thousands, like those extra surcharges on your Medicare premiums. Yikes.
So how do you use this new power without, getting burned? Let's dive into Section 2 and look at a real-world example of how smart planning makes all the difference.
Okay, so let's imagine a couple. While they were working, they were earning a combined income of about $180,000 a year.
And that $180,000 income, it put them squarely and consistently in the 24% federal tax bracket, year in, year out. Pretty straightforward, right? Okay, now here's where the magic really happens. In retirement, just by being smart about how and when they take their money out, they can potentially slash their tax bracket from that 24% all the way down to somewhere between 12% and 22%. That's a huge difference in real dollars, and it's all because they're finally in control. But there's always a but, isn't there? There's a catch you have to watch out for. It's called the Required Minimum Distribution, or RMD for short. Basically, once you hit a certain age, Uncle Sam comes knocking and says, hey, it's time to start taking money out of those traditional retirement accounts. And if you haven't planned for it, those forced withdrawals can send your tax bill soaring, pushing you right back into that 24% bracket you worked so hard to get out of.
So how do you get ahead of those RMDs and stay in control? Well, welcome to Section 3. Think of this as your toolkit, packed with the secret weapons you need for a tax-efficient retirement.
Okay, the first strategy in your toolkit is what I like to call the art of the financial cocktail. See, instead of taking all your income from just one source, you get to be a mixologist. You pull a little bit from your taxable accounts like your traditional IRAs or 401ks. Then you add a splash of totally tax-free money from a Roth IRA. And maybe you finish it with a twist from a low-tax brokerage account. The result? You get this perfectly balanced, tax-optimized income stream that you designed yourself.
Next up, we have something called a Guaranteed Lifetime Withdrawal Benefit, or GLW. It sounds complicated, but the idea is actually super simple. Think of it like a personal paycheck for the rest of your life. It's a feature you can get with some annuities that gives you a set, predictable amount of income every single year, no matter what the crazy stock market is doing.
But here's the really cool part. The secret benefit of a GLWB that most people miss. It's incredibly flexible. You get that predictable, guaranteed income, which is great protection from market volatility. But, and this is key, you don't have to take the maximum amount every year. You can actually dial down your withdrawals in certain years. And why would you do that? To stay in a lower tax bracket, of course. It puts you in control.
And now for our third big strategy, the Roth conversion. This one is a real game changer. The concept is basically paying your taxes on your terms, ahead of time. You move money from a traditional tax-deferred account, like your IRA, into a Roth IRA. You do pay taxes on the amount you convert today, but here's the incredible payoff. Every single dollar you withdraw from that Roth in the future is 100% tax-free, forever.
Okay, so you're probably thinking, why on earth would I pay taxes now if I don't have to? And that is a great question. Well, for a lot of people, it's an absolute no-brainer. Doing a Roth conversion can seriously shrink those future RMDs we talked about. It can also protect a surviving spouse from something called the widow's tax penalty, which is a real problem. And ultimately, it just creates this amazing pool of tax-free money you can tap into later in retirement, no questions asked.
So, okay, we've got these powerful tools at our disposal. Balancing withdrawals, GLWBs, Roth conversions, but which one is the right one for you? Well, that's what we're going to figure out in Section 4.
All right, think of this as your personal cheat sheet for making the right choice. A Roth conversion? That's probably your best bet if you expect your taxes to be higher later on, and you really want to get a handle on those future RMDs. But you have to be able to comfortably pay the tax bill on the conversion today. What about a GLWB? That's a fantastic choice if you want that predictable, steady income and a sort of automatic balancing act. Just remember, it's typically for folks over 59 and a half. And drawing from taxable accounts first, that can minimize your taxes early in retirement, but you gotta have a plan for how you'll deal with those RMDs down the road.
And now we've reached the final and most important step in our journey, putting it all together to create your tax-efficient plan. This is where the magic happens.
You know, if there's one thing to take away from all of this, it's this. In retirement, you move from being a passenger in your tax journey to being the pilot. And proactive planning? That's your flight plan to a much more secure future. You are truly in the cockpit.
Think about it. Your retirement income is like a giant puzzle with a lot of different pieces. You've got Social Security, maybe a pension, your 401ks, IRAs, Roth accounts. So the real question is, how are you going to arrange all those pieces to create your ideal picture?
And you know, you don't have to figure out that puzzle all by yourself. If you'd like some help putting the pieces together and building a truly tax-efficient retirement plan, that's what we're here for at the Annuity Expert. Our services are always free. You can give us a call at 770-755-1565 or find us online at annuityexpertadvice.com. We'd love to help.